Have a few minutes? You won't believe what you can do with it. Open a Regions checking account online in as little as 5 minutes. Then enjoy award-winning service and banking tools and tech that help you live in the moment. Learn more at regions.com/live in the moment. Regions Bank, member FDIC.
Live from the Subaru of Gwinnett Studio, inside the Sonesta Gwinnett Place Atlanta Hotel, it's time for Regions Business Radio. Regions Business Radio is presented by Regions Bank. Brave the beginning. Member FDIC. Now, here's your host, J.D. Mealer.
Thank you, Mike Salmon. Good to be with you today on Regions Business Radio. I'm J.D. Mealer. And, you know, sometimes you just meet folks, you sort of heard about them, maybe you've shared an email with them, but you never get to know them until you sit down across from them. And you are going to have a great time listening to this episode and meeting my new friend, Caroline Taylor. Caroline, thank you for coming.
Thanks, JD. You're too kind. Glad to be here.
Oh, we're so happy to have you. You are the head of SBA at Regions Bank.
Pretty crazy, huh? It's been an awesome ride so far. 2 years in, and it's been great.
2 years. I mean, what a crazy time to start. I mean, so you started a new job in 2021 at Regions.
2021. Started a new job virtually in another state. So process of moving my entire family, getting into a new company, you know, learning new friends, leaders at this bank. It's been a ride for sure.
And we happened to be in a little bit of a pandemic at the time, so that was crazy.
Just a little, you know. Had 3 kids, getting them moved, and, 3 different schools through the process. But I say I have a hero in my life, which is my husband, who's 100% supportive. So it was a team decision, team effort, and, we're in it to win it. So we're Team Regions all green now.
Nice.
Yeah.
Well, it's so good to have you, and thank you for what you're doing at Regions. Yeah. SBA banking is... SBA banking is sort of like if you know type of thing. There's a lot of questions about it, and I know we're just jumping right in because we got a lot to cover. SBA, Small Business Administration Lending 101.
Oh, yeah.
What are the basics? And remember, our audience may be business owners, they may be business executives, we might have, finance executives listening, and there may be someone that has heard of SBA lending. They might have a misperception of what it is. So if you're giving a little bit of SBA 101 to somebody that's new to it, what would that be specifically as it relates to Regions Bank?
Yeah, so I love that we're starting from the foundation, and let's do that, because with coming out of the pandemic, a lot of people knew about the PPP, Paycheck Protection Program.
I was going to ask you about that.
The forbidden word, right? But that really shed a huge light on the Small Business Administration, which has been around for decades. And really the SBA, it partners with lenders to provide capital to small business owners who normally wouldn't have an advantage or the opportunity to do that. So how does that happen? The SBA, they have their guidelines, their book called the Standard Operating Procedures.
SOP.
SOP, yes. It's about 500 pages long, so we just spend our time at night reading that. But, that's what makes us so good. We're able to pull from that and just really make it applicable. How does that apply to our bank policies? So at Regions, we are what they call a PLP lender, a preferred lender provider. We are able to approve our loans without having to go directly to the SBA. And that's great because it shows our expertise. It shows how we're able to quickly get deals out, approve deals without having to have that delay. But with that being said, it also helps us to do loans that normally we wouldn't do on the conventional side. So by partnering with the SBA, I'll give you a live example. Let's just say someone has a need for a $100,000 line of credit. With this SBA partnership, there's a guarantee to that. Depending, it can be anywhere from 85%, 75%, 50%, depending on the program that you go with. And we'll get into that in a bit. Okay. But let's just say it's a 75% guarantee. That $100,000, we know that if for some reason you're not able to pay us back, we're able to partner with the SBA, and we only have a risk of $25,000. Gotcha. So the SBA covers that $75,000, and Regions comes in with that $25,000. So that allows us to lean in a little more with borrowers that normally wouldn't have that opportunity.
Very good. Okay, so right off the bat, and I love that we're just jumping right into it, PLP.
Yes.
That's an important differentiating factor in the market. I had this conversation with someone not too long ago and was able to explain that to them because the question came up, well, how long do we got to wait for SBA to approve it? That's not the case with us, as you mentioned.
Right. There's not the case. Now, there are some nuances where, if it's our own loan, we will have to send that in. But the majority, I would say 95% of the loans that we do, we are able to approve within our delegated authority is what it's called. So that does allow us to expedite that process a lot sooner. Whereas if other lenders have to use the SBA, add on an easy 6 weeks before you get your loan approval.
Oh, wow. Mm-hmm. Okay. Oh, well, let's go back for a second. I said I wouldn't bring it up, but I just got to. PPP was an amazing program that saved a lot of small businesses. Are there still active PPP loans, or have the majority of them been forgiven at this point?
Yeah, there are. Majority have been forgiven. Definitely we moved on to the forgiveness phase of this. And we're starting to see now the loans that are on the books. They tend to be some of the higher dollar amounts because, the SBA did come back out in loans for a certain bifurcation. I believe it was 150 and under, went through that streamlined forgiveness. So there are some loans still dangling out there, but not for the most part. Majority have been forgiven.
Okay. And by far, in the normal lexicon of business and life, everybody knew. Everybody knew about PPP.
Yeah.
Because it became a thing. I would imagine if someone was at their country club, they might go, hey, your PPP loan or whatever.
Yeah.
Now, the flip side of that is there's a 7A, there's a 504, there's all these different, loan programs or products that you hear in relation to an SBA deal. What are the differences between a 504? Or maybe I don't need to ask the differences yet. Maybe you can define for us what is a 504 loan and what is a 7A loan.
Yeah, first thing I will say, after coming out of our PPP days, the first thing I have to say is, look, this program is totally different from your standard SBA loans that are offered. And have to really level set there because that was truly a grant program.
Yes.
So
gotcha.
when you think about SBA, we do a lot of level setting with our customers. There's going to be extra documentation that's required. There's certain eligibility requirements that we have to walk through, which is why Regions is so good at what we do because we really believe in partnering with our clients. We want to be personal. We want to walk them through this stage because it's a very important stage of life of doing a loan this big. And also we're partnering with the government, so there can be some very personal questions that get asked. So to your question, there are a suite of products that SBA offers. And the benefit that we add is we're able to become as a consultant. We want to get to know you, not just sell your product. Like, JD, what does your small business need? Tell me what you're going through right now. What are your challenges? How are you looking to grow? And through the questions that we ask, we're able to kind of marry you up with what product we believe fits within the SBA.
Perfect.
So within that, I'll keep going.
Yeah.
We have a program called the 7A program, which is the guarantee that has a guarantee to it. And then we have the 504 where we partner with CDC, community development companies in that partnership. So let's break down the two.
Yes.
When you think about 7A lending, there are also, I say, some sub-kids underneath that. You have your 7A umbrella, then you have your express product, which you think about, it has a 50% guarantee. And we're able to use our conventional underwriting standards with those because we can get a quicker, documentation can be quicker. We can use some of our own underwriting guidelines, but still have that basic eligibility to be met. But within that, we can use of proceeds, working capital, equipment to purchase a building, business acquisition, change of ownerships. All of those we can do underneath the SBA umbrella. It's just the different products that we try to fit the need to the customer. So then we move on to what we call our standard 7A small dollar loan, which can go up to $350,000 or $500,000. And depending on what you need, same use of proceeds can be applied. But again, that's where that percentage of guarantee shifts between 75 to 85%, depending on the dollar amount. And what we've realized coming out of PPP is that need, what you hear a lot of underserved communities, is underneath that $150,000 space.
Okay.
So last year in fiscal year 2022, not to do too many numbers out there, SBA did around 47,000 loans. That's huge for $25 billion.
Ooh.
That's a lot of money, right?
That is a lot of money.
Around 60% of those were small dollar loans, 150 and under. So that's a lot of loans that happened truly to business owners that needed working capital, that needed funding for equipment, But it, again, goes back to highlight how are we able to lean in here with SBA?
Yeah.
Because normally
okay.
these smaller loans, they can be just as pricey, right?
Yes.
And the documentation can be exactly the same as a $5 million loan.
Right.
So you partner that with a banker that knows SBA, that understands SBA, we can walk you through that process. And we can talk through what do these fees mean to you? What does this term look like? What type of collateral do we need?
Oh, yeah.
So when you think about 7A, you think about use of proceeds. And we can do a mixture of use of proceeds. Like I said before,
Okay.
I'll home back into this. We'll get to industries later, but we can do finance a building. We can do construction, leasehold improvements, business acquisition, or partner buyout, you know?
Yeah,
We are
okay.
now in the baby boomer age. And, you know, people are looking at, is it time to sell my business? Employees have been with them for a while, so I won't go down that road. I know I'm probably jumping ahead
No,
of
I
myself.
love that because we have an active opportunity right now in our market for a business acquisition, partner buyout type of financing.
Right.
And what we learned, Caroline, was so the father is selling to the son. You know, the father wants to retire. The son's active in the business. And it's been more educational than it has been transactional for them. And I find that at Regions we're really good with that sort of advising approach in a situation like that. When we have an opportunity to come in and educate someone as to, hey, it's not really what you think it is. Let's help you get there. The satisfaction on both sides, us helping and them not just doing the deal, but in this case, handing off something from generation to generation. The dad built, it's a great company that's received nationwide accolades in their industry. It's not just a loan.
No, it's a relationship. And a lot of times people will ask me, Caroline, what do you do? And I like to throw it in there and say, you know what? I help dreams come true.
Okay.
You know, or I help
like that.
I help to preserve businesses. And they're like, what does that mean? But if you think about the scenario you just talked about, that is a generational, you know, passing down to the next generation,
Yeah.
preserving that small business. And what better way to come in and say, hey, you got the technical side of it. Let me show you what we're looking for from an SBA standpoint.
Yeah.
You know, you're working in the business day to day. You know the employees. You know the customers. The customers know you. Because
Ooh,
half the
yeah,
time,
that's
think about
good.
it. Everyone offers a standard product. What sets you apart? And normally for that small business owner, it's the small business owner or those employees.
It's the individuals.
It's the
yes.
individual. And so when you're going through a change of ownership, a big part of that risk is how is this next owner going to operate? Are they going to have that same DNA as the way I ran my business, right? Or are they going to totally change it?
Sure,
So
for
to
sure.
your scenario, if you got my son coming in, yeah, he may do a little crazy stuff, but no, I'm just joking there. But he gets it, right? He saw mom or dad run this business, grow this business. He's seen him at the kitchen table possibly figuring out how do we make this work. So he has some skin in the game already. And we like that. And we like to see
Yeah.
how you were brought up in it. So you've seen him go through seasonality of doing well, not doing so well, of
Yeah.
figuring out when do we need to pull back, when do we need to pivot like we did in COVID. So
Uh-huh.
a lot of that's where we're really good at because we're able to tell the story.
Yeah. I love that you say that you help make dreams come true. My mantra for this year is, and I heard this on a different podcast, and it was so simple to me as bankers. We have two jobs: make friends, solve problems. If we can do those two things for anyone we meet, and sometimes solving problems isn't always making a loan or giving them an interest rate on a deposit account. Sometimes it's helping find an employee.
Yeah.
Sometimes it's helping to buy a piece of equipment. Sometimes it's helping negotiate with an accounting firm or whatever it may be. Whatever the problem is, if we can help them solve that. And I think your team in the SBA world and my team in the core commercial world exhibit that regularly because of the culture that we have at Regions Bank. We've talked on this podcast many times that we have a very, very kind culture, very kind and engaging. I'm not saying you're still the new person at Regions, but you're still 2 years.
Right.
Have you found our culture to be just that, kind and engaging? And in doing so, do you find it plays well for our customers?
Absolutely. Actually, I've been saying, okay, when is the honeymoon going to be over? You know?
Yeah.
But
Okay.
I was born in the South, so I'm used to everyone being nice. We speak to each other, and I went up
Yes.
north for a while. It's a little different.
Okay.
So here it was like coming back home, and not
Yes.
just coming back home. It was very important for me that there was a culture, not only respect, but the relationship and driving that in,
Yes.
because that spills over to what we do day to day.
Yes.
So to your point, when we bring a deal in as a banker, it's not just getting a deal in transaction. I'm walking you through the underwriting part. I'm going through closing with you. If we get stuck, I'm problem solving. I'm getting on the phone with you and the underwriter or the closer to walk through this. So it's not a
Yes.
handoff. And I think that's a part of our culture.
It is.
Because not only, I've seen some of our bankers where we are closing loans and like a year later, we're still following back up. How are the kids
Yeah.
doing? Do you have any other needs that we maybe
Relationship.
it's relationship. So to your point, that is something that's embedded within Regions, because we talk about that partnership. Like to your commercial bank, I don't want to just used to give me SBA loans, but hey, here's an opportunity that you may have that I'm bringing to the table. And what does that look like,
Yeah.
right? It just kind of bleeds over.
So you can tell how we run the podcast, because we're it feels like we're all over the place, but we're still focused on SBA. Remember, our guest today is Caroline Taylor, head of SBA banking at Regions Bank, and we're having a little bit of a conversation right now about our culture, at Regions. You mentioned something about communicating through the process. I think that the vast majority, all right, I'm making a blanket statement, I realize that.
Okay.
The vast majority of people that have borrowed money from SBA have not been led through that journey very well, like I think we do it here. You find a lot of SBA borrowers that have been frustrated because they don't know where the fees go. They don't know why we take this collateral. They think that their deal is in a black hole somewhere, never to be seen again. But you're telling me that we approach that entire process differently at Regions.
100%. And the way our business model is set up, it is to make sure that we come in as educators and that we are as transparent as possible. Because like I said, this is a great product, but it can be a very encumbersome product. And when I came to see it, I wanted to make sure our bankers, we were able to have those difficult conversations. So
Yeah.
for example, we may need to take a personal real estate as secondary collateral. We need to tell that up front and set expectations. So for me, it's about that transparency. It's about how do we communicate? Because it's best that we tell you up front than you finding out when you get a commitment letter, right?
Avoid surprises.
We don't want any surprises here.
Yeah.
And so education is a huge part of it. And and I say we never stop learning. I'm learning every day as well, even within SBA. So the better I'm able to know my craft about SBA, the better I'm able to serve my customer. You may come in think you need a line of credit, but as I talk you through it, you may realize, you know what? I am going to develop a new product. We're going to be expanding. Maybe I need to take this building I've been renting. How can I go buy some real estate? With that. So
Yes.
it is going back to knowing not only the product, but knowing your customer and walking them through that. So what we bring is a level of education and a level of partnership. We literally like to say sometimes we handhold. We got to say, let go, but we understand that this can be a very long process. And there's a lot of questions, and we don't want people walking away not understanding what they're signing up for.
Yeah, I hear you describing, for lack of a better term, sort of, maybe I'm using it the wrong way, but advocacy, because if people have experienced a mortgage, or if they've experienced buying a car, those transactions are quite a bit different than an SBA transaction. So as we advocate to the SBA or to the bank, as your bankers do that, we're telling the story. We're explaining what's going on, and sometimes our questions alone can help the customer realize some things. Now, you said secondary collateral. What does that mean?
Good question. So a lot of times, we have to collateralize the loan. It doesn't have to be for an SBA, but if let's just say you're going to buy a piece of real estate, and at that appraised value, it may be not enough to cover the full loan. And if you have a home that has equity in it, let's say 25% or more, one of the SBA rules is we have to take that property as a part of it. So that becomes a secondary collateral. That's not necessarily the case all the time in conventional. So it's important that we say that up front, especially if you have a scenario where you have a community property, a husband and a wife.
Yes.
Because that wife or that husband that may not be on the loan will have to sign off on this.
Yeah, that could get real sticky.
It can get a little sticky there. So it goes back to the transparency, and it goes back to up front explaining the why behind it.
So let me ask you this, and you just said it. I want to make sure I heard it correctly. That's not Regions saying, hey, we need this other piece of collateral. The standard operating procedures, the 500 pages you mentioned earlier that are produced and published by the SBA require that?
Absolutely. That is a requirement within SBA. If you have 25% or more equity in your home, primary resident within that state, absolutely.
So how does that play? So then is that how, and I hope you don't kick me under the table and tell me to be quiet when I ask this question. So is that how we can sometimes get to 85 or 90% LTV?
Oh, JD. It's not. No, it's not. That's not the purpose of this.
Okay.
The purpose of it is also about having that skin in the game, right? Because with SBA, it's very clear in the SOP, being short collateral is not a reason to not do the loan.
Okay.
So it's very important to say that.
That's very business friendly.
It's very business friendly. But when you do get over a certain amount within that loan, like $350 and over, that does become one of the rules within the SBA.
Gotcha.
Yep.
Gotcha. That wasn't a trick question.
That wasn't a trick
promise.
question. But you got me there. Yeah.
No, that's good stuff. It's such a needed product set for the variety of ways that you can structure things. We recently on my team did what's called a 504 loan. We helped an existing customer purchase a warehouse in Jacksonville, Florida, and it went really well. There's 2 loans, and there's a bank loan and an SBA loan, and there's just all this stuff going on. 504.
Mm-hmm. And the 504 program really took off during COVID. 504 is normally used for your larger equipment or real estate loans.
Okay.
So asset-based type of loan. And because we had such great real estate rates during that time, the 504 was where to go. Because with that, you think about, let's do simple math. It's called a 50, 40, 10.
Okay.
So regions in that first will normally have that 50% of the loan LTV. We're partner with a CDC, a community development company, that does the 40%. That CDC is who partners with the SBA.
Okay.
So then they're the ones that have to abide by the eligibility rules, all of the SBA. And normally they were having some lower fixed rate loans.
Okay.
So you're able to come in and sell it at that advantage point. But then also you still have to have 10% down from a borrower standpoint. And so we're still able to use a blended or a higher amortization with that CDC portion, because they can do up to 25 years.
Oh, wow. Okay.
Yeah. So there's a lot of advantage to the 504. And like I said, over the past 2 years, we've really seen that take off. A big part of that was because of the low rate environment at the time. And real estate was at a boom.
Yeah.
And so we had a construction we can do in a 504 loan. Also, if you think of green projects,
okay,
we're able to do a higher loan if they qualify for certain. If you think about putting solar panels on.
Okay.
There's certain requirements that we can do up to $10 million in financing,
partnering
dang. with them. So the big advantage there is with that partner with the CDC, we have to retain a certain amount of jobs, or the small business owner has to retain a certain amount of jobs. So think about, we're really trying to pour back into the community and service the community. So by establishing this type of loan, we're retaining jobs, or we are expanding and be able to offer more jobs. So there's certain qualifiers that have to take place as well.
Very good. 2 questions on that regard. A 50-40-10, client puts in 10% equity, 50% first position is held by regions, 40% second lien is held by the local CDC, or is it held by the SBA? And does the customer make 2 separate payments? Oh,
good question. We're really getting detailed here.
Yeah.
So at the beginning, it is regions. So regions will hold both, the first and the second.
Okay.
And then after about 120 days, 180 days, the CDC will come in and take us out.
Okay.
They will sell those loans. So you will end up with 2 separate payments: a payment to regions and then a payment to that SBA CDC.
Typically the same rate?
They can be different.
Okay.
So and you can have a fixed variable rate on that first, but normally it's a fixed rate on the SBA loan.
Okay.
Yeah.
Okay. Very good. Yeah. Very good. I've done both types of loans for customers, and each situation is different. Mm-hmm. Now, with the 504, the SBA eventually actually holds a portion of that debt, whereas in 7A, we make the entire loan, but we get a guarantee from the SBA on a portion of that loan, as you mentioned at the beginning of the podcast.
Correct. That's correct.
Okay.
That's correct.
Okay. How often does SBA change, update, or sort of adjust their product offerings?
Great question. The product offerings are not adjusted much at all.
Okay.
We've had the 7A 504 since I've been in SBA lending. I will say there will be some tweaks to it. Like, for example, they'll have the Community Advantage program. That was a pilot that started years ago, and it was just brought back and extended through 2024, and that's the Community Advantage, and that's really to help the underserved community partner with that. So or the veterans program. So there'll be certain programs they will add in that may have an expiration to it, but the flagship programs, think of the 7A and 504, they don't change.
Okay.
There may be rules that come out that the SBA change, and we have seen in the last 5 years where different things when you come to affiliation or not guarantee percentage, but liquidity requirements, equity requirements.
Okay.
Those type of rules can change, but in essence of the program, that normally doesn't change.
Do you ever go from 504 to a 7A, or do you ever go from a 7A to a 504?
Great question. Normally it was normally a no-no, but now we're realizing that every business has a different need, and we're here to help get capital to customers, and every credit box is different. And so, like I said before, we have the SOP, Standard Operating Procedures of the SBA, but then we also have Regions credit box that we have to adhere to as well. So sometimes we may get a customer that we bring in and we think all day long, yes, let's do this 7A, or let's do this 504. Let's say if we start off as a 504 and it's a real estate loan. Then we get into it and they say, you know what, we need some working capital as well. Well, then why don't we partner and give you also in a 7A working capital line of credit with that? So those are things, again, going back to that consulting role that the SBA banker is able to lean into and truly understand the need of the business. Or we think about refinancing. Normally you couldn't refinance, 504 to 7A. There are new rules that are coming out now. What does that look like to be able to take a 7A and refinance it with a 504? There are a lot of qualifiers to that. We won't get into it, but that's where the expert comes into
I made a look in my face. That's why she said we're not going to get into it, because I'm over here thinking about, okay, how's that going to work?
Yeah.
Because I start going through my customer list, who has what, and why would we do those things? Can I ask you, you mentioned different programs, underserved communities. Do you know how those are defined? Is it certain zip codes that have a particular median income? Do you know how underserved communities are defined?
Yeah, that is a great question, and one that's really been pressed on the last few years, because we've seen that term, used a lot. Like, what does it mean for underserved communities? And normally I say it has been defined as demographic groups that historically have not had capital access available to them. Think about minority, women-owned businesses, people of color, that you've seen that too. And normally you can say that we try not to get into what zip codes and all, but when you're doing an SBA loan, to input the certain demographics of the customer. And that is totally optional if that's done or not. But SBA normally will pull that information, and based upon the information they have within their system, kind of brings out, where are we lending to? What communities are we leaning to and not leaning to? And the problem with that is it is totally optional. Every lender doesn't have to input that information into the system. So when you think about the underserved community, it is those communities that when you look at those data points, they may not get as many SBA loans. Like, it's been shown that more white small business owners get SBA loans than you would say people of color. So when you think of the underserved, it's generally demographics that are not getting or typically haven't had access to capital. And I truly believe that's mainly because of an awareness and education standpoint. You think about maybe they're not connected to a banker, or they may not have a banking relationship. And some of it can be just because of past histories or experience, or not being brought up where you understand going to a bank and what the importance of establishing a banking relationship. So that's where, you have a lot of online lenders that have come into play. You can do things online versus coming and establishing that type of relationship. But what we've understand is, especially during the pandemic time, more than ever, having that relationship of someone that knows your business, understands your business model, understands you're going through a rough patch. How do I walk through this with you and make sure we're making the right steps?
How about, you mentioned veterans? SBA has veteran-specific programs, or?
They do. So it's called the SBA Express Veteran Program, and it's done under the program. We have the 50% guarantee. You have to be 51% of a veteran that has ownership in the business, and the fees are waived on that. So one part of SBA, there is a fee that's upfront that's paid by the borrower that is waived for a veteran.
Wow.
And that's only $350 and under.
I don't know if I realized that there was a veterans program.
Wow, that tells me I still have some work to do, JD. But that's great, and that's what it's about. There's so many product offerings, like you said, within SBA that sometimes you can just focus on the big flagship programs. But when you pull back and say, hey, who are my customers around me? What does my community look like? Who is not, am I not feeling a need for?
Yep.
You know, or as you say, if you go to the country club and you talk to someone, hey, maybe they were served before in the military. Now they're out and they're thinking about doing a small business loan. There are specific programs set aside that will help them, you know?
Very good.
And knowing we can use the SBA to partner is a great advantage.
So, not to recap the whole thing, but we have different offerings: 7A, 504, underserved communities, some veterans things. We have a focus here in Northeast Georgia. So, in just north of where we sit today in Hall County, they will soon break ground on an inland port. That's a big deal. So that means that goods will connect directly from the inland port in Gainesville to the port in Savannah via direct rail. So what you're seeing is huge warehouses being built. We have an influx of companies. And what I'm going with there is one you wouldn't think of with what I wouldn't think of is with SBA, but companies that import and export.
Mm-hmm.
Am I right that we have a product that assists companies that either import or export?
Not only are you right that we are the number one export lender for SBA.
What?
Yes, we are, JD.
The number one export lender.
The number one export
in the
lender
nation?
In the nation, yes, for SBA lending. And I tell you, our secret sauce is our internal group. All right, we have an internal,
Global Trade.
our global trade group, yes, that we partner with. And really that relationship allows us to continue to service the client the way that we need to. So there are certain parameters in order to have, we do export working capital loans like we do for a term of a year, and then we reevaluate it. It can go out further. But as long as they're exporting a certain percent of the goods, we're able to partner and give 90% guarantee loans for our small business customers. Yeah.
So as we sit right here about 3 miles up the road, we have one of those. Mm-hmm. I mean, we have a customer locally that exports cardboard and paper to India. And I think we've been providing them with an SBA export-import line of credit for 7, 8, 9 years, and it works wonderfully.
Yeah, it's great. And like I said, we renew it every year, so we're constantly in touch with the customer, making sure the need is still there. But to your point, we need to tell that story more, because we did over $30 million in export loans in 2022 fiscal year.
Wow.
Yeah.
So does the world know?
I would say they should. No.
We need to tell it.
Them. And we're going to. I think it's our 5th year in a row where we've been named the export lender.
That's fantastic.
Yeah, it's a huge honor.
Here in Gwinnett, there's over 500 international companies. 500. Where we sit in Gwinnett, there's basically 1 million population, 185,000 students in the school system, 9th largest school district in the nation. We have millions and millions and millions of square feet of office, warehouse, distribution space. And we're targeting, companies that import and export. And to know that we can go out and call somebody, or somebody's listening to this, that may export goods.
Yes, and the great thing about it is the SBA definitely knows, because their local district offices, they think of regions, right? When they have customers coming in, they're helping in and consult. They're calling us, say, hey, we may have an opportunity here. And we're immediately jumping on the phone and talking to that customer to really try to find out the need, or we're going to their business one-on-one.
Well, that's a different set of understanding. I mean, we can be nice and we can be, engaging, and we want to do the journey and all this stuff, but there's a lot of difference when you're financing a building that's down on Main Street, and you're just going to get a value, and you're going to make a 90%, 80% loan, and you're going to fix the rate, and this is going to be your payment. That is a different type of transaction than financing export working capital, isn't it?
Yeah, it's totally different. But it also speaks to how, our country is committed to helping support small businesses that are making products in the United States, and to be able to export those out, that they're willing to put a 90% guarantee with lenders to say, hey, if you'll partner with us, we'll help back it. So it's about getting that education. What does it look like to be an export that had that export line of credit, and what are the terms, and some of those nuances is where, again, our bankers come in and sit side by side to walk through that process, and knowing within a year we're going to renew it, but these are the things you're going to need to have in place. What financials we need to see, what AR we're going to need to see, is there going to be a borrowing base to it? So depending on how the line may be, the amount of the line, or different qualifications for that.
How big do they go?
We can go up to $5 million.
Really?
$5 million, yes.
Wow, and we're there the whole time. That's very impressive. That's almost as impressive as being a cheerleader at North Carolina State University.
Go Pack. You slid that in there.
I did, didn't I? I was looking for the right time to do that.
Yes.
And you were an NFL cheerleader also?
I was.
And we appreciate you using your cheer voice on the podcast today. Everyone's really impressed by that.
Thanks. I love to bring it out every now and then.
Cheering on those SBA deals.
Yeah.
Tell me your fondest SBA success story. Not by name. We can't talk individually by names on the podcast, but maybe you can talk industry, what the transaction looked like, something that you were a part of that you're most proud that you helped someone accomplish something.
Oh, my God. There's two that stand out in my mind. So I can't. I'll tell them quickly.
You're not
going to
cry,
I will not cry.
Okay,
no.
okay.
But there's one we talk about the underserved community. I would say there was a company, can't say the name, and the industry was a service-based industry, but they did hair products.
Okay.
And they actually sold what they call weaves. And there's where you put, extensions into your hair,
Okay.
and they need a line of credit. Well, obviously, people say, well, that's speculative, or is it going to last? Well, one thing that we know, even through the pandemic, at least my husband knows, I'm going to get my hair done.
Okay.
And with that being said, we were able to get with the customer, went through her business plan. We saw what she was already making in revenue, but she needed a line of credit to continue to fulfill her orders as they were coming in.
Oh, wow.
To supply the needs. And then my other success story, really quickly, it was a change of ownership. It was actually in the child care industry. And it was an associate that worked within the industry. She was brought on board to be the director, and it was an absentee owner. So it wasn't ran very well.
Okay.
So when we got the financials, historically, it wasn't performing where it should perform. But this person had come in and started to turn it around, had the right employees in place, made sure the ratio of teacher to student was spot on. The
Okay.
education was coming.
Oh, yeah.
So she got in there and did the work. So when it came for her to buy out the small business owner, the questions began to ask by the underwriters, why aren't she selling it to her children, like keeping the family? But the seller actually said, I know this employee. My kids have no desire to do this.
I'm not selling this to my kids.
But she's been in here. She's been living it. Has helped turn this around. And, we were able to we had to take the financials that we had. We were able to use projections to show the difference that this associate, now owner, was going to be making in this business, and for year 1, year 2, and how that was going to help them get to a cash flow standpoint that was going to support the loan.
Oh,
so
wow.
when you're able to tell those stories in conventional lending, we don't want to use projections, right? But SBA allows for us to use projections, which are, what we think the business is going to do in a year and 2 years. And they have to have assumptions to it. So we need detailed, or how do you think you're going to get to $2 million in sales, right?
Yeah.
Or how are you changing this business model is going to turn into be able to repay our loan. So being able to walk through those steps. But it went back to the management experience. That was huge. She'd been in that business. She understood the business model. She understood the parents. And that seller also knew, and she knew, the parents were coming too because of the ownership. So having someone familiar there,
that is so cool.
that was going to continue.
Do you think when she was brought in as director or sort of general manager or head of school or whatever, that she ever thought she would buy it?
She always had it in the back of her mind because she was a
Okay.
teacher prior.
Okay.
So
Okay.
always had that. And that's what I find about small business owners. Somewhere innate within them, there's a passion, right? And it always takes, because I always say, it takes a huge leap of faith to own your own business and to actually do it, right? I said they're like the superheroes. And so she was a prior school teacher that turned into, being a director at a preschool. So she loved being around kids, loved the education part of it.
Okay.
And this particular franchise really leaned into the education. They were like on the forefront. So you had kids leaving this school, going into public school or private school. They were already reading and writing. So that franchise brand had a reputation as well that aligned with her and what her, vision was to be a small business owner.
Oh, those are great stories.
Yeah.
Those are really good stories.
Thank you.
Okay. I just got to keep going. You mentioned franchise.
Yeah.
Talk to me about franchise lending.
Well, that is something new that Regions, within the last year or so, we're building a franchise vertical. And the great thing about a franchise, they're proven models, right?
They are.
We use franchise base that shows us, what are the default rates? How long have they been around? What makes them tick? What type of education did they supply to their new owners they're going to have. So when Regions, we realized, hey, how can we partner this with small business lending? And it's like a perfect marrying couple with SBA.
Yes,
because when you
it
think
is.
about franchise lending, either it's a startup or it's someone that may not have that direct industry experience, but they have transferable industry experience.
Yep.
And you're partnering with an already
I like
proven
that
model.
term, transferable industry experience.
Yes. So what I've noticed with franchise lending is we have a lot of corporate career folks that they're ready for something different, that they say, hey, this franchise seems interesting to me. Let me see what they have to offer. I have experience. I've known how to run a P&L before. I know how to manage employees. I really liked whatever that industry may be, whether it's cycling, daycare, running a restaurant. How can I marry that up? And I don't have to start all over. You've already tested this model out.
Yeah.
You know what it needs to cash flow. You know how many employees I need. The branding is there. It's like an easy fit. So you pair that with SBA, which can come in and do startups, or they can come in and do partner buyouts. So if you have an existing franchise owner that's looking to go out, you look someone to go into there.
Right.
So franchise is a vertical that we are building here at Regions that we're extremely excited about, and we're able to offer both on the SBA and the commercial side of the house that I think is going to really help us to continue to give a big advantage to our customers.
We have some really good targets in Gwinnett that we work with Peter Salas.
Yes.
Peter's been on before to talk about, franchise lending, but it brings up another point. We could talk for hours. All right, so startup lending. We just mentioned franchise. That is if you're a franchise, or don't get mad at me when I say this, sometimes franchises are a business in a box. Like you said, it's already been vetted. The training's already in place. There's a marketing plan. People come set you up and teach you how to do the thing that you're franchising. That is an entirely different startup model than somebody that has an idea to make a new widget that's better than the other widgets, but they want to start that thing and do it on their own. I got to be very clear that those loans are very hard to do.
Yeah, they are hard to do.
Whether it's SBA or commercial.
Absolutely. Because to your point, JD, there's nothing proven behind it.
Yeah.
We don't have anything to show or predict how are they going to perform.
Yeah.
Are you going to be able to pay us back, right? And I think it's very important to know the industry that it's in as well. Is it a service-based industry, right?
Yeah.
Is it an industry that is seasonality? So those are things to think about as a small business owner when you're going to a bank and you're wanting to get that financing. How much skin are you able to put into the game?
Yep.
You know?
Oh, yeah. We expect a lot.
We expect a lot.
And look, business planning, forecasting, and I think that goes back to what you were saying, how important it is for us to use SBA to support job growth, job expansion, job retention, especially in this environment where finding and retaining talent is the hardest thing that and combating fraud are the two most important things that any business does. And we help them with that.
We do. And one thing you talked about, JD, with that small business owner, they're doing everything.
Yeah.
So we want to come in and say, your finances, it's not uncommon to not have the most unsophisticated financial set of books that we see. And when it comes to closing, for example, everything has to be documented. You're wanting a line of credit, you pay for equipment, we need to see every receipt. And it's not uncommon that a closer, I've seen them come in with like a shoebox of receipts from a small business owner, and they have to filter through every single one of them. But it goes back and shows the expertise that we've put into our building out this line of business, because we understand the importance of walking through our customers and not making them feel like judged because they may not have. We want them to know we get it, and we're trying here to help you.
That's so good. Like I said, we could talk about this for a long time. I hope that we can get back together maybe and do another episode. But what I'd like to bring it in for a landing, and more than anything, and Caroline, you correct me if I'm wrong, we could talk about 7A, we could talk about 504, we could talk about export-import, we could talk about franchise. We used a lot of words. We introduced some concepts today. The thing that I think is most important is at Regions Bank, we want to focus on you. We want to listen. We want to help. Make friends, solve problems.
That's right.
Be somebody's hero. Whatever it is, we are committed to you. And Caroline joins me in that commitment to you, Mr. and Miss Customer, Mr. and Miss Prospect. If you are considering a franchise, and let me be clear, we're starting our franchise group, and we've not vetted all franchises, so maybe we can do some, we can't do others. But I can promise you one thing. is that someone from Caroline's team is going to listen, they're going to help, and they're going to tell you the truth.
That's right.
Borrowing with an SBA loan or guarantee is different, and our team stands ready to help you not just understand the difference, but experience the difference. Because, by the way, our lenders, if I may call them that, our SBA lenders, those bankers that work directly on your team that help people through the SBA journey, they have years of experience in doing this, don't they?
They do. They do. Years. So I have some on my teams over 25, 30 years of doing just SBA lending. And they're good at it. And back to a word you used earlier in the broadcast, JD, they're advocates. So I want our customers, if you listen to this broadcast, to know we go to battle for you. You know, we understand your business. We get in there. We want to partner with you. We want to make sure we're telling that story once it, gets into our operations team. And we want to keep it clear and transparent. And I hope I leave you with saying, SBA sometimes can have a bad rep because it can be encumbersome. Or you think, an SBA loan doesn't make a bad loan good. We still look for top credit quality.
That is a great point. And I know we're wrapping up, but you bring up a good point because you and I, we both have a friend that runs SBA credit. We both have his phone number in our phone sitting right here on this desk. I love the point that you make that an SBA guarantee does not make a bad loan good.
That's right.
Folks, we can help. We want to help. But if your business is failing or if it's going in the wrong direction, that's like putting a Band-Aid on a shark bite. We encourage you to begin early, thinking about the status of your financials, the importance of a balance sheet. And I don't mean how much credit you have available to you as a liability. I'm talking about cash. I'm talking about equity. These things are still important.
Absolutely.
To an SBA credit underwriter and credit approver. And I do think that sometimes it is, let's just go get an SBA loan. They got to say yes to everybody. Remember, we're a preferred lender. Our approval is reviewed by the SBA. The last thing we want to do, whether it's got an SBA guarantee or not, the last thing we want to do is put you in a situation where we stress your company and it doesn't succeed. And we will tell you
Absolutely.
If we see something that would be a roadblock, that would be a hindrance to your success. If you're headed down one direction, and I remember this story, there was this guy, this was early 2000s, and he thought it was the greatest thing that he bought 3 truckloads of phone booths to refurbish. The look on, I wish y'all could see the video of Caroline's. So this is the early 2000s. Cell phones are taking off. And this gentleman came to the bank that I worked at the time with this business plan to refurbish phone booths. No loan could help that guy succeed. Phone booths were going away. And I'm sure the gentleman was mad.
But that was his dream, JD. Did you shatter the dream?
I try to solve problems too. And this guy's problem was he had bought 3 trailers of something that was obsolete. And it didn't matter how clean they got, or maybe you put an iPhone charger in there and somebody stands and talks in it while they're charging. I don't know what he was thinking. But my point in sharing that story, which I think is just he did have a dream, but it was our job to validate
That's right.
that dream, not whether the core business of refurbing phone booths was right or wrong. It was, how are you going to make money?
JD, I think about it this way. We all have good friends, right? Then you always need that friend that's going to tell you the truth, whether you like it or not. That's how we are sometimes. But when I realized they come back, because sometimes it's a not now. It's not a no, but it's not right now. Or sometimes we don't have the answer, but I can show you who does. And one thing we do really well is partnering with our local offices where we can connect you with like the CDCs in the area or the SCORE businesses that can help you get on the right path and walk you through it. So when you are ready to be bankable or that idea is ready to come to fruition, then we can have a broader conversation. Yeah.
I'll tell you what, anyone would be blessed to have a meeting with Caroline, have her help you or her team. Yeah. We have a really good team of bankers. Many of you listening have heard and met virtually via the podcast some of our local bankers, our global trade folks, our local commercial bankers, executives. Our SBA team is second to none, and we are here to help. Under Caroline's leadership, we continue to grow. We continue to get better at what we do, because what you've heard today is Caroline's heart. And I can tell you as a leader, that flows down through her organization. And anybody that, maybe you're a CPA and you have some clients that need SBA lending, we're here to help. Mm-hmm. You know, whatever we can do. Caroline, why don't I hand it off to you for any last points, any closing thoughts you'd like to share?
Yeah, no, thanks, JD. I'm so honored to be on your program today, and I can talk about SBA lending all day long, because like I said, at the end of the day, our customers is why we do what we do. Mm-hmm. And even as of last night, I had one of my bankers sending me a video that was out in St. Louis saying, look what we did. And it was video in a restaurant that we'd done leasehold improvements on, and they were going to have dinner there. And the excitement in her voice and the banker there, it gave me chills. And I responded back, that's why we do what we do.
Yeah.
And I want you to leave people to know that, you know, it's something special that we have here at Regions. It is a culture thing. It is relationship. And it is about doing what's right for our customers and also for our bank. And we love what we do. So if there's any way that we can help, feel free to reach out. And we'll always be in that consulting role and, you know, guide you the best we can, but we are definitely here and always will be SBA strong.
Yes, we will. And you bring up a wonderful point that we'll close with. I love referring to our customers as we. You know, we did that. Whether it's expanding a restaurant like the video you got last night, or, you know, we've done some projects locally, and I love it when I'm able to consider myself or my bankers part of a customer's team. Mm-hmm. And when you deal with our SBA group, that's exactly what you get, is another team member advocating for you and helping you. So I hope you enjoyed this podcast. I have certainly enjoyed it. We hope that it's helpful to you as a service to our community. Making resources like this available is certainly first and foremost. If you've enjoyed this and you can share it with a friend or anybody that you know that may need help with SBA lending or just learning something new, we are here for you. So, again, thank you for joining me today, Caroline. You've been listening to Regions Business Radio, and my name is J.D. Mealer. Thank you.
Regions Bank, member FDIC, equal housing lender. This information is general in nature and is not intended to be accounting, legal, tax, investment, or financial advice. Regions believes this information to be accurate when recorded, but it cannot ensure that it will remain up to date. Consult an appropriate professional concerning your specific situation. The information should not be construed as a recommendation of a specific course of action for any individual or business. All Regions products and services are subject to qualification requirements, terms, conditions, fees, and credit approval.